it's firstly important to point out that even some of the traditional measures of success that we associate with venture, like valuation and exit sizes, they don't always tell the full story either. Many times, returns from exits are concentrated amongst a handful of investors and don't necessarily waterfall to a broader community of employees and other stakeholders who have had a hand in the company's success. Unfortunately, I've heard more stories more recently where this even extends to founders who receive little or no financial windfall from an exit due to the structure of the company's capital stack. And this is where founder education is really, really critical. And anybody who's in an entrepreneur support role, really helping a founder understand what the financing options that they are pursuing mean for them down the road. And as they, for example, if they take venture, as they need to raise more and more rounds, what do they need to know about their own ownership stake and what that might mean in a traditional success metric. But for impact companies, our hope is that ultimately measures of success are holistic and aligned with the mission that the company is trying to achieve. And that should, of course, include financial metrics, including revenue growth, profitability. We've certainly heard the phrase increase in popularity around revenue over rounds that really emphasize that success cannot be measured by just how much capital a company is raising, but if outside capital is needed to help a company achieve its mission, how is it aligned with the company's purpose? For impact startups, and then there are a lot of people who are really, really, really smart at impact measurement. I think the most important thing is tracking metrics that are aligned with the business and the ultimate mission of the company, and that is going to vary based on what the business of the company is, whether it's number of people served, access created for a target population, environmental outcomes, and more. And it's important to note that there are alternative financing models for companies that actually include impact-linked financing, which links the social and environmental milestone to when capital is allocated and how much it costs. Many of you are probably very familiar with structures like social impact bonds, which tend to be exceptionally complicated, but are really linked to impact success, or things like impact-linked debt, where there is a reduced interest rate that is linked to impact metrics. A couple of other things that are important when it comes to success measures are their survival rate. How long has that startup been creating the impact that it's trying to achieve, and is it continuing to be able to do so in some sort of sustainable growth fashion?